Hello traders, Gary Wagner here. It is 10:45 in Honolulu, 4:45 in New York on Wednesday, 17th day of September 2025, and this is the evening report for gold and silver. For the first time since December of 2024, the Federal Reserve cut interest rates. Additionally, Federal Reserve officials implied that there would be 2 rate cuts following later this year.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. While the unemployment rate remains low, it has edged up. Job gains have slowed, and downside risks to employment have risen. At the same time, inflation has risen recently and remains somewhat elevated. In support of our goals, and in light of the shift in the balance of risks, today the Federal Open Market Committee decided to lower our policy interest rate by a 1/4 percentage point. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a pace of around 1.5% in the first half of the year, down from 2.5% last year.
Even with the announcement that GDP continues to be sluggish and inflation continues to be persistent, gold fell today, currently down $29.88. That's a net decline of 0.81%, taking the most active December contract to $3,659.97.5. Typically, lower interest rates would put a negative bias on the dollar, but considering that it was probably priced in yesterday's strong 0.71% decline, today the dollar gained 0.38%, taking the index to 97.037. The question now becomes whether or not today's sell-off in gold is a one-off or marks the beginning of a correction. The key number to watch is going to be $3,680, just about today's low, a key and critical price support area. It matches up with these open and closing prices that occurred ending on Friday the 12th of September, beginning on the 8th of September. A break below that tells me that gold will go at minimum to $3,650 or $3,590, the 38.2% Fibonacci retracement. Those retracement levels, see 23.6 and 38.2%, would qualify as a acceptable but extremely shallow correction after such a strong upside move. A deeper correction could take gold to the 50% retracement at approximately $3,548 and as deep as the 61.8% retracement that comes in at $3,503. While it is a little too early to see if today's sell-off is a simple one-off or the beginning of a correction, whether that be a shallow correction to $3,650 or $3,593, or a deep correction as low as $3,503, we will need to wait at least a day to see if there is follow-through selling or if price support enters the gold market. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.